Thank you, everybody. Thank you for the panelists to be here. I think this is a very interesting panel with a plethora of different backgrounds and, uh, and experience in the sector. So we're going to be discussing Web3 trends. We are all already in a good cycle or favorable market conditions. So it's going to be interesting to see what our panelists have to say. I'm Gabriele Zennaro, partnership leader at Playa Ventures, and Playa Ventures is the biggest Web3 accelerator in the space. We have more than 300 portfolio companies. I would love to know from each of you a brief description about an introduction about yourself, brief description about the firm, and how you're going into crypto in the first instance.
Hi everyone, I'm Sierra San, founder of Edge, partner of C-Square Ventures. We are a chain-agnostic investment firm in Web3, and we do a lot of early stage investments, also invest cups into their market as well. And we aim to provide not just capital, but also operational expertise to our portfolio company, as I have years of experiences doing listings and token as a token management and operations at 4B. And also that the institutional business and global growth. But prior to that, I was with traditional finance doing consulting with BCG in New York and at office. And first got into crypto because some of our clients back then, like KKR and Orman, already have secret BTC trading desk in 2017. It's like okay, it's real and have to get in. Bitcoin occurred 90,000. So quite a job.
Hi everyone, that's a bit better. I think you're on your third day, on my fifth day. So I like here in Bangkok. Didn't do the bike, you probably won't do the bike, too many deposits. So co-founded Venture in 2017. We essentially are the largest spot trading firm in the world in crypto. We do climbing the ranks in the derivative side. We do quite a lot of OTC, as in liquid tokens OTC. We do some investing. So I'm proud to wear the Venture Venture merch today. There's 3 of them in the world. The merch is very precious. Some of my family is confused if I'm in clothing or in investment sometimes. Long story short, we invested in, so we've been investing in 2020, mostly infra first, and actually we go all the way to meme coins. These are long-term positions that always actually come from actually the VC and VC side of the business. And then we started to build like you guys, but at a much smaller scale. We do some incubation. That is essentially things that we would be doing if we were not building Wintermune, where we just essentially do a bit of like employee transfer and knowledge transfer, and then you can leverage some of our stuff essentially. These are more the blending borrowing platforms like Wildcat, PMCI, so an index provider that we have with the block, and a few things like this. How did I get into crypto? Said no to it twice, 2012 when I was building a first trading firm in interest rates, because I was kind of brainwashed by, or not independently thinking enough, just listening to central bankers all day. And Tigos was a bit too small compared to what I was building at the time, so basically ignored it. Said no to it in 2015, but then said yes to it in 2017, where essentially someone I respected quite a lot on the macro hedge fund side, and it was wanted to allocate some.
Hello, my name is Netzer, and I head up the portfolio strategy and venture investments for Animoca Ventures, the early stage investment arm for Animoca Brands. Animoca Brands, I think most of you know it for gaming, which we are still a gaming company, but also with the goal of digital property rights and Web3. Started my journey about 2016 through some poker buddies, started buying some Bitcoin, I came from a long TradFi background as an investment banker in New York for most of my career, and started angeling into some early DeFi protocols, and that's kind of how I got into crypto. Pleased to be here.
Molly here from RSG Ventures. RSG is a crypto investment firm operating since 2017. I joined in early 2020. Early on mostly focused on DeFi research and investment, but over the years became more of a generalist covering everything from Bitcoin, Deepin, crypto AI intersection, and have opinions about some other verticals as well. Story of joining the crypto, no deep, profound moment that led me to crypto. It was mostly by chance, actually.
By chance?
Right.
What was the chance?
So to explain, actually, I just graduated from Tech University, focused on quantitative finance. I was looking at hedge fund positions or VC positions, and I wanted to remain in Asia. I was mostly Asian crypto VC, and at the time, DeFi was just starting to emerge, so I just joined before DeFi Summer, and then a lot of the finance knowledge I thought it would be useless, became very useful, analyzing a lot of the complex DeFi mechanism design, so that originally led me to dig deeper into the crypto rabbit hole, and then that's how I kind of built out the passion and deep interest for a lot of the technology, and then slowly also got the vibes of the community.
So I think it's always interesting to see how the person got into the space, and what is the reason why they started the journey, right? And I see many are coming from the traditional finance background, and we are almost all of us in a very early stage investment. Accelerator, you said that you were gonna enter into the acceleration side as well. You started.
We've been incubating this year. We incubated 4 companies the last 2 years, so it's not necessarily something we do at scale. We had a little program last year where we essentially did a podcast format where we essentially just give people a little toolbox for free, just to sort of think of like go-to-market, fundraising, and all the little tools that you need for just to get your MVP essentially. That's been quite well received. It was just to give it to the world. We don't. We like to do a lot of things for good karma, and we just don't. So it's just. I think it's helpful to us just to segue into the VC world. Is that it's helpful to us if people know how to pitch the best way, so that they can very concisely articulate, why they're the best, what should be best, why is it obvious that we should be in this thing. So I think it's useful to them. It's also useful to us, to be honest.
Yeah. And I think quite a lot about the knowledge transfer between the investor and the startups that they invest into, like portfolio companies. There are many ways to approach investment in this, especially in this industry. So what do you think is maybe we start with China. What do you think is the role of the investor in the relationship with a startup? Are you doing knowledge transferring? Are you actually helping out on different levels, or are you focusing mostly on providing capitals and that's it?
Like I said earlier, we aim to not just put up capital and then we're hands-off, right? And then also historically speaking, when you do those kind of investments, 90% of them will be gone. And we aim to provide our expertise for token operations, like in detail token operations, in terms of community growth, sentiment moderating, and marketing across different regions, especially our edge will be in Asian markets and especially Mandarin-speaking markets. And just because naturally a lot of the centralized exchanges are Chinese backgrounds,
So it's just like easier to communicate with them, to kind of speak the same languages there and to understand the core KPIs for the exchanges for new token listings, either as new registered users, active trading users, retention rate, or TAO provided by those new users into the platform. So we can kind of help and guide our portfolio companies for the conversations there with exchanges, and of course, introduce them to market makers, and just the way we work with them in the past, we kind of understand different market makers now. Like, Winter Moves, we work with them a lot, and definitely our top recommended market maker. And they, I think, in terms of strategy, it doesn't vary that much, but it's actually care and the amount of work you put in for the projects and you market with. And in that sense, we can help our portfolio companies screening. There are over 100 market makers right now. It's kind of crazy, right?
You know more than me, so.
Yeah.
That was a lot.
Yeah. And then, of course, post listing, there will be needs for coming up with new narratives and collaboration partners with, all the different players in the ecosystems, all the way coming up wallets, exchanges, and different kind of media. So that's like all the things that we can do for companies.
I think my personal approach, and that I can talk about fun, because some things you just cannot standardize, right? Like for everyone. I tend to have like a very direct and honest relationship with portfolios, and I really value these relationships. So, for instance, at the end of the last year, I did a count that I had like 120 plus post-investment meetings. And it's actually not easy because every year we are expected to keep deploying, keep researching new narratives, new opportunities, and then if you want to maintain the relationship, it is very time consuming, right? But I think this is also makes you very happy when there is a certain milestone and you're actually part of the team. Often it also leads to certain conflicts, like if I disagree with something or I think something doesn't make sense, I'm going to be very direct. But in the hindsight, the conflict that I had with founders ended up leading to very good results. So some of them are now, because of it, in very interesting market verticals, made good pivots or remained in certain verticals and they wanted to switch. So I think just I value a lot this direct conversation, and I think this is just impossible to standardize. And then from a fund perspective, I think we also try to work hard for our portfolios, fight for them when it comes to the research is a lot of I think that I will repeat what Tiara mentioned, and we also try to do a lot on the event side of things to build this open union platform where we mostly invite our portfolios to kind of share their message with the Asian audience. We have like a Mandarin newsletter that is very popular, like we publish it weekly. So far we published 150 plus research insight pieces, so that is part of the reason why we are considered high signal by Mandarin community. So it is something which you can scale, right? I think when Mandarin community sees our name on the cap table, they usually pay more attention to the project because of the research reputation that we are building in this community.
I think part of I see a trend here that is focusing especially on some specific region. We as outline managers now we are going more and more into these regionally specific areas in order to find the best talent out of it. Are you focusing on one specific region as a firm, or you are trying to go global? I'm talking to Landon now just to. Are you focusing in one specific region of the firm or you tend to go global? What is your approach in that?
It's global. I mean, I think different parts of the world, there's certain focus areas. In the MENA region, we have more focus, not necessarily just on the projects. I think ecosystem partners are very important in building our ability for the sort of flywheel across all the different constituents of the ecosystem for us to scale. Asia, obviously, I think that's one place where Animoca has a lot of not just contacts, but I think it's the one part of the world where portfolio companies and other groups recognize us for dominance. But I would say North America is the place that I tend to spend more focus this part of next year, just given the lack of coverage. So it's not necessarily, I think it's more on an individual basis because we're a pretty small, lean team. We're just trying to make sure we have a perfect coverage across every part that we're, not even there, not daily.
And basically from West.
Yeah, I'm trying to address, and I'll give like a half an hour. So there's a few things that people expect and people don't necessarily expect. So I think that people when they come to us for investment, they really expect, and we try to actually just separate to a degree to reduce conflicts as much as possible. The venture side of the business and the commercial to the market making side of the business, we try to keep things separate. But the reality is many teams come to us because they want trading to help in many dimensions. So we end up having also doing a lot of value-adding activities with teams we invest in. But sometimes it may just be like a Web2 product that just addresses like Web3 users, and we just have on the BD side. But like some other times, it's literally like a DEX protocol where people that we may or may not, So we do quite a lot of things on the governance side. So we've got Kellen and his team on the governance side that basically this proposal so quite active on the DIDX, Arbitrum, Aave, governance on the DAOs as such. We made a proposal in Athena recently also, so you've probably seen that. So I think it's the sort of things that are a bit more transversal that we find it's quite helpful and we can uniquely help with. Now, like we're one of the few market making firms that invest that never forces people to sign a market making agreement when we invest, because we think therefore can make better decisions independently. So it's like if you think that we're the best market makers, just sign with us. It shouldn't really matter if we invested or not. So we don't like different transfer people and such. So that's one of the things that I like to highlight as well. Like I just think that it's just more aligned that way. So ultimately we try to add as much value as we can. We are in like a interesting position in a way that we got two elements. We don't invest in that many teams every year, so it's just we don't have LPs and stuff, so we just deploy about $25 to $20 million a year in about 20 teams every year. So we're about 120 in the fourth or fifth year now, 120 with other companies. And the other element is more, in terms of position in the ecosystem, we just know everyone. So we deal with exchanges, we deal with VCs, we deal with foundations. So whenever a team wants to be connected to, wants to build like a new L1 or so on, and it's just easy to be like a very, actionable connector.
Yeah, thanks. Mine must be like that. Like this needs to have, apart from providing capital that is very important for the teams, but we have some weight in the industry, so that more you.
The idea is that the best teams never need the capital, and the best teams just need the help, and they just, generously open the realm for you to be useful. And essentially, so it's more, if you want to be in really tier one deals, it's just, there's an element of capital, but it's much more about what I need to provide that. Let's not, since we don't have that much time, let's talk about trends for a second in the next year. So investment thesis, the focus for your firm in the next year, it's supposed to be a good year. You chat with me, it's like
Yeah, it's supposed to be a good year. Skimming the fund life, we're for the first fund to VC part almost fully deployed. Did most of our investments in 2022 and 2023. So now it's a lot of post-investment support right now. So this second half of this year, starting of second half of this year, started new listings, and then next year also them focusing on access, but working with portfolio companies is to increase the liquidity so that really that's really hurt the market for those coins. And then also we're like active on secondary markets, but we don't buy directly from secondary market. We work with the foundation, so still a VC research focus, but. Yeah, we buy from the foundation with investing, and in return we provide all the expertise and help we can do for them. So historically speaking, we've worked with from 2022 since the firm started. We worked with IMX, we worked with Sui, Aptos, Layer Zero, so some of the bigger ecosystem, and we helped them with developer growth and overall. Institutional adoption and retail adoption, especially in Asia. So that will be kind of our focus. But in general, I think for VC investments, given the market cap total for crypto already increased 180% in the past 12 months, and total GBL increased about like 157%. But on VC investment, actually, it's quite slow compared to our only up about like 24% of total capital investing in VC deals. So I think it's kind of like a common agreement now. Investing in early stage VC deals is kind of slow, but we're still constantly looking for the best team that we can back. It doesn't mean that we're not investing anymore, but we definitely still are. All the way from infrastructure and use of DeFi, gaming. Obviously, we think when mass adoption coming into the market in terms of users, not just like crypto traders, right? Gaming is still going to be a big bridge for bringing a big amount of users there, and then like entertainment focused related companies that really going to be an next one. And recently, Trends are seeing tons of AI agent deals. I'm not sure about you guys, but we do see a lot of them.
Yeah, I think there's a few elements that can make this current moment in time in the cycle a bit difficult for some. A lot of the VC money is basically just lands into like altcoin, on the altcoin spectrum, and there's still the part of the market that hasn't really taken off. Nowadays it's just a battle between the majors, where the institutions put some money in and just chase. And then you have meme coins on the other side of the spectrum, which upsets some people. I mean, I wrote a love letter on meme coins a few days ago that didn't upset too many people, so it's good. But I think people just need to constantly rethink like brand versus product, and then what do you start with? And essentially, some people who just literally spent years building products just tend to be a bit upset sometimes when there's a meme coin that came back 2 months yesterday and surpasses their market cap. A lot of VCs, especially even the liquid VCs that are quite institutional, have a lot of trouble selling meme coins to their LPs. They maybe had I was having dinner with a few yesterday, and one of them, so he manages $300 million, and then there's literally like a 3% pocket that's for like these outside bets where they can actually just do a bit of marketing, a bit of these, even while they're much more established. I mean, these are meme coins that have been out there for at least a year. I know another VC that I'm not going to name, but there was a 4 months ago to his clients to Pepe per trade, and rest as stuff sitting up. So I think people still have a bit of trouble to trade really the whole spectrum. To second what Sarah was saying, we also conscious of where we are in the cycle, and then about when we're going to land. If we invest now, this is the longer vesting periods really. So you probably just hope to get some liquidity in the next cycle, really, and not really this time around, which is fine. And then we also continuously we do some stuff to TC, but we also do where we buy, right? So where we still deploy boundaries regardless, but we're quite careful about valuation as well.
I mean, I think for us, we continue to deploy, have to be very mindful of, exits to make sure that it's within, online, because we still have LPs that we have a fiduciary responsibility to. Bright spots that we're more focused on probably consumer X gaming. I think Sierra mentioned entertainment, culture. I think that's still one area that we're very bullish on. The sectors that can really, anything can really bring non-Web3 users in, right? So that's why we have a pretty large investment in the K-pop industry. I think that's one we're really looking forward to. We're still pretty agnostic, working with all the different foundations, their accelerator programs. They have some regionally, some more centralized, but really working with them to find sort of the earlier stage projects that they're incubating through their own programs. I think getting involved in a lot of those, helping mentors and these founders. I think that's something we've been doing, probably continue to do so into next year. But overall, pretty, feel pretty good. I still think private market valuations are not at the levels where most participants can make the money. So, still pretty picky when it comes to primary market deals. Secondary, OTC, I think, along with everyone thinks about, I think there's going to continue to be more activity there, including ourselves. But really, besides consumer as gaming, I think, I think looking at the business model, whether or not it comes down to a real business that can generate revenue and profitability in a more sustainable way. I think going forward is, you guys mentioned kind of institutional money coming in, and then you also have sort of the money that goes into old coins, meme coins and such. So we believe that, guys, as the industry matures, they're going to start putting more, like businesses with a solid sort of business plan.
I'm looking for early stage bets in new verticals. For instance, Ciara mentioned AI agents. We made our first investment in AI agents 2 years ago. On-chain AI agents. Pure AI, they are also, I think, sponsored. You can see the logo here. So at the time, that was actually, it wasn't exactly AI agent, but it was very adjacent to it. So we usually start from understanding like the market direction, trying to bet on like very interesting directions. At the time, the logic was that for me personally, I was looking to hundreds of DeFi prototypes, and at some point it became clear that the innovation is becoming super nuanced. You have to really dig into details to understand like the kind of differentiating advantages that would lead to better capital efficiency of a new project, or why this is a better solution than the market leader that has network effect on a technical theoretical standpoint. And it became clear that it's actually very hard to do new things, that there are no new primitives that would allow developers to do optimization that would actually improve user experience and allow agents to do many more interesting things. So we started to look for these new primitives that could introduce more degrees of freedom for developers to do interesting stuff. So at the time when we invested in Theoric, it was more about bringing verifiable ML inference to smart contracts so that smart contract developers could do more interesting things. It is the same time when we invested in space and time and the thesis was similar, like bringing smart contracts being super static, not being able to interact with the environment, to react to real-time information was the big issue that was making a lot of user UX for a lot of DeFi protocol stack. So we invested in space and time that was being sort of like tamper-proof data to smart contracts, right? So I think trying to build thesis about the direction and to like have skin in the game early on when it's very high risk is what I like to do personally. Last year, when there was SVB bankruptcy and USDC defact, And when you saw how much money Tether is making and what margins they had, you were like, we want to include stable coin projects, right? So we led around for usual money that is that recently launched and went from 0 to 400 million. I hope they keep growing like in terms of adoption. But this is a type of high-risk bet, like that is driven by choosing direction, making thesis, and finding like good things early on. So I hope to find more kind of not consensus, maybe somewhat new interesting directions that you scratch your head and you proceed and try to build thesis on first principles and get some skin in the game.
Love to dig a little bit deeper into that, but right, I think Daniel told us that there's only 2 minutes left. So I'm curious to see in the audience how many founders we have. Good. Okay, so I was about to ask the best advice you guys have for founders. Let's do it in 2 minutes. What is the best advice that you have for founders? One best advice.
This call is in 2 minutes, but I would say what we don't hear enough, and I mentioned it before when people pitched in general, tell me why the best person or the best person, the best team to solve the problem you're trying to solve. People just know how to explain everything else, but very, very rarely know how to just demonstrate why they're the best. And if you're the best, then it's just going to be obvious that we have to invest. And more as a founder, I would say focus on hiring anyone smarter than you.
Similarly, I think
Controversial one. One controversial one.
just you have to get to the point. Make sure your initial pitch within 5 to 10 seconds is strong enough that captures enough attention for us to keep the state
Be resilient. We've seen a lot of successful founders get those monetized, but in order to be able to be resilient or to keep risk control, I think research was everything, and risk control is maintenance. So treasury management, risk control is very important. We've actually seen founders whose funds raised to the investing coins. We've seen a lot of them do it in place of a team to buy ETH, and it's probably okay if you disclose it to investors, but it's pretty dangerous if you're putting on like a gamble hat there. So risk management, again, I think is very important.
Omer, you're the last words of the...
Again, be resilient is the most important thing. It's more important than being smarter than your competitor because there are going to be moments when it's very tough and maybe your smart small competitor is just going to go back to their top job and and not waste more time and get more gray hair. But I think at least even looking at the most recent bear market, some of the most resilient founders became market leaders. I think Panda is a good example. There was so many interest rate derivative projects in the previous bull cycle, and then who is there now? Only Panda, right? So I think this speaks a lot about founder resiliency and commitment, and don't get discouraged by VCs that don't spend time and invest time to kind of research and understand what you're talking about. I have a lot of respect for founders, and also that I see how they get also treated by VCs, especially when there is more leverage on the VC side of things. I kind of feel for the founders. So don't worry about rejections. Just keep your thought from first principles about what you're building, and you have great confidence in. Just get used to rejections and just keep pushing.
Great. Well, thank you very much. Thank you very much for our panelists, and thank you very much for the audience to keep attention. Please, thank you.